as entrepreneurs, it's very easy to get distracted and do too many things. How do you so I've had an opportunity present itself to me in the last couple of weeks, and I'm kind of on the fence of like, is it just too much now? And I just need to double down on what we're doing. So how do you determine what is a good one to back and do?
Anything that, for me, it's what's connected to what I'm doing. So I agree with you, Jack. I try to be as hyper focused as possible, and distractions 100% kill the business and any momentum. So for me, it's too, I've always, even in my earliest plans, I've always wanted to, I have this philanthropic side. I've always wanted to help and do. I like, for example, we're working with a school at the moment. The investment amount we got to give them is only £500, but that £500, we're gonna be bringing in like a green screen video recording equipment stuff into their school that they just don't have. And if any kids, like Bill Gates founded Microsoft, but if you read his book, he was lucky that the school he went to had that computer, whereas all the other schools in the area didn't. And it was just because, not obviously not just, he probably would have been successful anyway, but because he had that opportunity in front of him and he grabbed it with both hands. Obviously, we have Microsoft, and there was some other stuff to that too. But the short to answer your question, Jack, I look at it as, does it directly benefit the business? Do I have somebody that can run it so it doesn't take much of my time, although it still will anyway? But if it is, it going to provide a net benefit to the business, like the investment platform will, because I need to raise money all the time anyway. Or is it something I just genuinely want to do in life? And which obviously the charity side is. The business will feed it. It will help also obviously with PR, etc. as well. But it's just something I genuinely want to do. So that's how I look at it.
What about you, Jack? What was your opportunity? Was it Henley centric? Polygamy? Third partner?
It's basically a surveying business was quite a straightforward business to start and build because we didn't like the surveying companies that we were using. We felt them slow, archaic, lack of detail in the areas that we needed. They were surveyors, they're engineers, they don't understand land planning development. They don't go to a building and look at a detached house and think, actually, I need to get both neighboring properties' window details and heights and eaves and ridges, because they don't. They're surveyors. They're there to measure that property, and that's that. So that was one reason. Second reason is we were spending more on surveys across the businesses than it would cost to hire someone in to do it permanently, and still have several days free a week. So, like Dorian, we like folding businesses into our ecosystem. It de-risks it from the outset. It also complements the other businesses. You keep margin within the supply chain. But this one is where we're spending a significant amount of money on this particular product, and there's a business that's local, I would say classic, like passion project entrepreneur that's running it. But I think he's an amazing product person, but he's not a great business, not necessarily a great business owner. And as a result of it, he's not focused on sales, marketing, operations, finance, and the talent. He's just focused on product, which is great for someone like me, because I would like to do everything but the product because I'm not technical, and that's not my bag. We basically discussed how we could raise the sales, improve the ops, and lean on some of our ops, which is great for our other businesses because your operational cost is your fixed costs. So whether you sell 1 unit or 50 units, it's still the same price. So if I can fold that into an overhead I already have covered in a business, it's fairly easy to get those businesses off the mark. But where I'm in the two minds on it is a product, and product businesses take a lot of work. You need to go through patenting. You need to sell a lot. You need to be forever changing and improving. And I'm just kind of looking at like, do I need it? If you get what I mean.
There's your answer.
Yeah, I mean, one track mind is my view. Absolute one track mind. Last month, yeah, we had £26 million worth of private equity capital come to the table, and my plan is to raise 10 million a month, like secure £10 million a month worth of investment to the business, because that's 100 million a year, and I am doing everything possible to get to that one unified goal. Tech enablement,
Ryan,
just fucking that is the yeah.
Ryan, I'm setting up a platform. Do you want to come to Wales?
If I sound like that, I'm going to have some elocution lessons. So, but on a
Ryan.
yeah, yeah. When I am in Wales, my Welsh accent comes out stronger. When I'm over the bridge, I do try to temper it a bit.
Thank you very much, Dorian.
Thank you, Dol.
Your business, right? You raise very impressively, by the way. You raise you've got a funnel, and sorry if that degrades it, but you've got a funnel that a marketing funnel that brings in leads, investment leads. And when you say that you in the past 20 months, in the past month, you brought in 26, well, you've got 26 million of like capital from investors, of prospective investors,
Yeah.
and you want to secure 10 million a month. What does that mean? That you're selling deals to them, right? They're buying the deal, yeah. Is that you? So if somebody buys a project off you, is that you found a project that require you've got to buy it for 100 grand, and it's 100 grand build, obviously, or whatever. Just as an example, 200k. You class that 200k as as capital. Is that what you're saying?
So yeah, so each month we have an amount of leads that come to us, and then we'll have an amount that qualify. So they turn up on a call, they qualify for the investment, or so we're not technically an investment company because they're not investing through us. Like you said, we're more like an agent in that way, but really we're a developer that's offering an end-to-end service, and they of the qualified people who show up show intent to want to go ahead, but whether they can actually go ahead this month, or whether it's in 2-3 months time, or 6 months or 12 months, how much capital is that worth of those qualified investors? And last month it was 26 million, month before it was 15 million. But my plan, and we'll secure on average this year, I think we'll end up securing about 5 to 7 million a month of the capital that's coming in. But we've just employed another consultant. We're up in the marketing. I'm putting a hell of a lot of effort into the AI enablement of the consultation and marketing side of the business, and the rest of it. And I think we'll get to a 10 million a month secured capital.
Great, by the way. But isn't what's the average ticket price of the deals you're like selling, your packaging, your end to end service? The investment, is it 200, 250, 300,000 per?
Yeah, it's about 200, 250. But to give you an example, yesterday we secured one that's about a 2 million ticket size. So we're doing a lot more of those now. I'd say one a month. We're doing like the bigger tickets.
Otherwise, you'd have to do 20, 20. Would your constraint not necessarily be capital then? It'd be capability of delivery, because 20, 25 deals a month, they take on average more than a month to actually do. So they're net, you're gonna eventually.
At the moment, we've got just under 80 projects in our life cycle. So we've got 80 projects in our life cycle, rooms and apartments. I don't even know what it is without actually looking at it at the moment. But it's going to be hundreds and hundreds of units. So probably like 250, 300 units that are in our pipeline. That's including rooms and apartments. But we're now weighting the unit deliveries onto apartments. So we've got it's something like 20 big ticket investors. These are all people with 500,000 up to 3-5 million, who are now all coming in for the bigger sites. So we're gearing up to just do like 20 apartments. We just secured like a 22 apartment scheme. We got 18 apartments, 17 apartments, 9 apartments, 14 apartments, all on the go right now. And then we're secure bigger and bigger sites. So that the idea is to wean off the HMO rooms and onto apartment units, and then ideally delivering anywhere from 250 to 300 apartments a year. And we'll have to then regionalize to do that, but it's much easier to do it at that product class. So that's how we'll deploy more capital pound for pound. But the smaller ticket stuff, like the buy to lets, is where we'll get real like volume of investors, where we already do, and that could be anywhere from 100 to 150 properties at any given time, is what we're gearing up to do this year. So it's all, to me, it's just how much can we scale, because the more scale we get, the better our unit economics get, and the more viable and stable the business becomes. It's the weird thing about property, isn't it? It's so regulated, it's so arduous that you really need to afford that middle management layer of department heads and specialists to come in and make life easier.
Well, in theory, yes.
In theory, so far it's only gotten better the better heads we bring into the business, but there'll be some critical inflection point where it's like, now you need middle management for your middle management, and that's going to be the interesting point. But that's where I think AI is going to be a big one. I think those middle managers are true middle managers that aren't specialists. I think that's where AI, and I'm literally building like every day at the moment, just building AI software that's going to enable the business. And I think that becomes the new layer of middle management. And then you just have your specialist head of departments who are managing a team, and that'll be it.
Are you going to call your AI software you're building a name like Octopus has Kraken?
Bo
Bo. Okay.
the bot, Bobot.
Yeah,
Dorian would call his Dorian.
I would.
Do you know?
Jack
Do you know
knows me well. And Jack would go for an American name that just is wild, like
Hank.
yeah, or
Dorian will
Axel.
be
Chad? Hey, Chad.
Yeah. Alpha, whatever they are.
Do you know your cost per acquisition for your money?
It's about 1,500 quid
per
per investor,
pot.
per secured
And-
investor. Yeah,
Wow.
crazy.
And the average size of investor.
It's about 200, 250.
Yeah, that's mega cheap.
Yeah,
Very good. Very good. Technology for you.
How
Yeah.
do I do what I want to do then, Ryan? Tell me.
Well, Dorian, it's all marketing. Everything sales.
Why don't you just pay Rye $3,000 a lead and be done with it and stick to getting your hair cut and running your business?
Do you want $3,000 the lead, Ryan?
Well,
50% markup. Well, 100%
build him an
markup,
AI bot.
technically.
I mean, look, give me another year of building out this team in London, because once I've done that, I genuinely think we'll be at a point where we've got 100 million a month coming to our door. Like if we've got 26 now with 4 guys.
Type of investor that so I'd say is a different type of deal. This is but yeah. Look, I think I mean, look, basically, what you've done, by the way, Ryan, is very impressive. I remember when I first met you, and you wasn't doing that. Whether you had the idea of it, and so to see it go from idea to genuinely having, even having just conversations of £26 million worth of investors in a month is very, very impressive. So congratulations.
It's insane. I mean, our close rate is getting more and more insane as well. So like we're closing more, the ticket size is getting bigger, and we're closing more and more. But it's a sales and marketing thing. That is raising money is every inch of it is just sales and marketing. Like sales and marketing, building know, like, and trust is why people invest. And it's the more you can build that know, like, and trust, the easier it is to secure the money. Like that to me is like, and sell a product. It's kind of that easy. It doesn't matter what product you're selling, because you just make sure you're targeting that user. And that, like, so for what you're doing, D, as long as your messaging is clear, like then you eventually find that bucket audience, and then you double down on what funnel, what verticals appeal to that audience the best, and then just perfect it, get good at it, and then suddenly you're raising lots of money.
Have you got a certain demographic of person who's investing in your deals? Like, are they do a certain job? Are they in a certain part of the country? Like, if you do look into, I know you're trying to build your AI bots to sort of dig down in that sort of data. Is that important to you?
I'd say mostly it's business owners and high earners. That's mostly our demographic. So business owners are always the best type of client. I mean, high earners are as well, like C-suite execs. We've got a lot of like big multinational C-suite execs, some family offices, some Middle Eastern funds, like this crazy array. But I'm so detached from it now. Like I just hear that like there's a family office who like has gone to the office and done a site tour day with dad, and I'm like, oh, fucking great. But I'm trying not to get in the weeds of it and just focus on being in everything I can to move the needle and improve the business, like building the sales portal right now, and then building the acquisitions portal and introducing the AI, and like what's the thing that's going to move the needle in a year's time is where I'm always trying to be. Like I know that if I enable the business with the bots the bot army that we're building, I've got 3 Mac Minis just sat in front of me right now, and another one we're buying in the north. Like if I can do that, I'll be so ahead of any competitor. Our marketing's already ahead. Our vertical stack's already ahead. If I enable it with as much AI autonomy, and then that gives us surface area to extract reporting and real data and syntax on every point of the business, there's just no way anyone's going to catch up. And I don't look at it from a competitor advantage. I just look at it as, how can I be better than what anyone else is doing in my competitive lane? And then I know I'm building that moat deeper and deeper and deeper to make it very hard to compete. But yeah, that is the game plan, and then take it national.